Joining me now to talk and explain and work through all of this is Tim Seymour. He's CIO of Seymour Asset Management and a CNBC contributor. Tim, the most interesting thing to me has been the violence of the correction that went basically unnoticed in the broader world news market and economy, unless you were a Korean day trader.
Yeah, and I almost feel that Korea's out there saying, I started this, I need to end it. And so we have some room to go still on the Kospi to get back to, I would say there's probably 15% more, but this overshoot in momentum on the way up, and maybe it's an overshoot on the way down, and well noted by BTIG, it's a thoughtful piece. Momentum's at, I think now at 3-year lows, and where we bottomed and where we bounced today on the SMH. This is where we, essentially bottomed back in March. It was an important level from which we went on a historic run. And if you look at the Kospi, I think it was somewhere about a 50% move in 74 days, and we've now pulled back half of that and in less than half the time, actually more than half of that. So ultimately, I think there are a number of cross currents. I think the Fed has a lot to do with a bit more of the crash yesterday and a bit more of the indecision today, as much of Wall Street is not entirely clear on what Fed we have here. We've got a BOJ tonight that also plays a role here. So, yes, fascinating times.
What is okay, let's talk about the BOJ for a second. I blame them for the rise in global bond yields. I blame the ECB as well, which has been buying peripheral debt. It's like this has been this false suppression of long-term bond yields that is starting to correct itself. How much of that is playing out in the U.S.? How much of this is Warsh's fault?
Well, it's hard to blame Warsh other than we have a new communication regime at the Fed, and people don't like how it was communicated yesterday. And maybe there's a question about Fed independence. BOJ seems to have looked past inflation for a long time. What's going on with dollar yen today is fascinating, and it certainly could unlock a number of other trades, especially those to me that revolve around a weaker dollar. So commodities and a lot of a lot of trades that are related to at least the opposite of what's been going on. I'm not sure BOJ is going to hike tonight. The market is behaving as it is. They've also not been shy about getting out there in the market and doing some of the lifting themselves. Maybe that's happening today. But I think the market is struggling with the realities of the fundamentals. You could be a CMT, and this is about as epic of a time to be a market chartist and a technician. But I think it's a lot of this is built on fundamentals. Higher yields and more hawkish central banks around the world put a big headwind on momentum trades.
Okay. That said, if we go back to the 30,000-foot view here, we had, to some extent, almost a 50% drawdown in some of these areas. Yeah. And the equal weight S&P is at all-time highs. Again, this has been, it's like a beautiful example. This is not 1999, right now at least.
No, it's not. And I would say after almost 9% of outperformance on the equal weighted, the RSP, whatever you're trading, to the S&P from essentially, again, those March lows, you're right up against a resistance level. So if I'm someone that's following charts, it makes a lot of sense that you would be fading that trade today. I think the fundamentals around market broadening are built on fundamentals. I think they're built on margin growth and EPS growth that's alive and well. Today's GDP number was a little bit weaker than people expected. A lot of inflation pulling back some of those numbers too. But ultimately, I think we have a broader economy, a more equal weighted market, and I think that will continue. In
10 seconds, what's the playbook now, given everything that's happened?
Well, I think oversold trades are ones that are kind of interesting here. I think you can probably play semis to get back another 10%, and that's for traders out there. I like gold. I like commodities, places that I think are going to benefit from a weaker dollar. I do think that the Fed has to step up, but in the meantime, I think those trades were overdone.